Hello, and welcome back to Commodity Corner. This is going to be the last Commodity Corner for the summer. Obviously, we're in the last week of August. Let's just get right into it. Last week, I did forget to mention one market, which was the coffee market. It was something that was on my radar, and I happened to have just forgotten to bring it up. So we're going to start there and work our way backwards. So this is a daily chart of coffee. And as you can see, it's had an explosive move. This is just how many days up? You've got 1, 2, 3, 4, 5, 6, 7, 8 days basically straight up. Let's just take a look quickly at the weekly for a minute. You could see it a little bit clearer. It's just straight up. So the question you're going to ask yourself is, why is coffee so explosive right now? Which would be the right question. The coffee market right now is pricing in tariffs. More than any other market in the world right now, the coffee market is really focused on tariffs. That's why you're getting this quasi-explosive move that happened. Usually coffee does not move like this. So it's not parabolic, but it's definitely moving with authority. This is not something I would step in front of. There's no reason to step in front of it. This is clearly bullish. But the reason that you have this ignition in the coffee markets is specifically due to tariffs. So for those of you that are thinking, well, I'm looking at other commodity markets and you're not seeing the tariff effect, right now, you're definitely seeing it in coffee. I'd be paying attention to it. For those of you that can pay attention to it, because again, it is an ice market, so it's a little bit not readily available to most people. But to those of you that do have it, I would be watching. I don't think this cluster over here is going to block it. Is it, at least with the speed and trajectory that it has, it's probably going to be aiming for the mid fours. At least that's the way it looks like it. At least as of today, anything can change. One of the things about the last week of August that makes it more challenging, it's not that all of a sudden everybody stops working. And it's not like news flow stops. It's just that the liquidity and the volume that you're accustomed to is not always there. A lot of people take off the last week of August going into Labor Day. Just things slow down from a volume and a liquidity standpoint. But news continues, markets are still open, everything just keeps going. A lot of people take off the last week of August. It's right before Labor Day, before school starts. People start to take off, take advantage of it. Last week of summer. So that's really where you get that kind of slowdown. Outside of that, coffee is looking great. Let's continue on to our other markets. We'll start with oil. Okay, right now, the oil market is pretty much in a holding pattern. There really isn't much to go on. We had a rather large build. I'm sorry, a rather bullish number earlier this week. Market didn't really move. The market is very focused on Russia, Ukraine, and where this goes. Depending on who you ask, depending on who you read, depending on who you speak to, some are very neutral on it. They don't necessarily believe a deal is going to happen, at least not in the time frame that's been set out. Some are thinking that maybe something happens in the last minute. There's a lot of rhetoric coming out from both sides. And it's pretty much a crapshoot at this point, what happens in the market from a deal perspective. We get a deal, and Russia, Ukraine is over. And we're looking in the high 50s, low 60s. We don't. We're probably looking mid 60s to possibly 70. We're very much in a range right now, and you can see clearly on the daily, it's a holding pattern range. Nobody really knows what's happening. When originally there was a thought that potentially there might be a deal and we might get this Russia, Ukraine behind us. And the market obviously took it on the chin, took it down, and we're back to holding pattern now because no one really knows where this is going. Not even the mediators. I don't think anyone knows at this point. So the ranges are a little bit more compressed in oil. It's not moving. It's not in play. It'll be in play when it's in play. Right now, it's not really in play just because of the fact that any headline could send it, but there really isn't any headlines coming out that would send it. So for now, there are probably better places to be, easier places to be. And not saying it's not treatable, it's just more difficult. Okay. Let's just look quickly at products and then we'll get into natural gas. Gasoline continues its nothingness throughout the summer. It really has done nothing. Demand really hasn't been there as people would like to believe that it's been there. It's just not there. It's doing nothing. So there's really not a lot to talk about over here. Plus, from a seasonality standpoint, obviously summer's over or coming to a close, which means that the seasonality aspect of gasoline is pretty much coming to an end. Let's quickly look at heating oil and diesel. Also, not much to write home about over here. Really wasn't doing much. There's a certain seasonality to it, but a lot of it has to do with the fact that Russia, Ukraine is keeping a lid on oil, which has an effect on products. So they're really not doing anything. Not much to do here either. Not much to do doesn't mean there aren't trades. It just means that it's not a market that's in play right now. I wish that it was. Unfortunately, it's just not. Natural gas continues in the downtrend. It's a very obvious downtrend. Any pops are getting sold. Does this change? Honestly, it might if we have a cold winter, but for now, the trend is your friend. It's in a downtrend. There's really no insights here. It's just bearish, plain and simple. There's really nothing else you could say about it. Rips probably gets sold. Any pops are probably short-lived. So it's not even like you can get like a solid couple of day move in this where you can make some cash flow accounting trend move. It's pretty clean in terms of that. If it's moved down, it's pretty predictable at this point. I think it's going to take a lot to get this going on the upside. A lot of things have not gone well for it this past summer. No hurricanes, unseasonably colder summer than anticipated. You're still getting injection season. They're putting more into the ground. So really you have a lot of bearish factors here. I think natural gas probably starts to wake up back end of September, early October. For now, it's tradable like anything else. It's a lot easier to trade than oil at this point because you have no headline risk pretty much now. The only headline risk you have is if LNG exports start to fall out of bed, then this thing could accelerate to the downside. But from an upward catalyst, you have nothing. So it's looking good on the downside. Let's just look quickly at the metals and look at the grains. We talked briefly last week about this bearish flag happening in platinum. Nothing's really changed. Friday's announcements, which we'll get to in a minute, really nothing changed there. So platinum continues to be in a holding pattern, waiting. I think it might be a tariff headline that probably sends this in either direction. It's not really looking phenomenal. And it's not a question of cleanliness. It's just a question of it's very choppy over here and it's not easy to trade this. And when you get an instrument like platinum where liquidity and volume could be challenging, especially at the end of summer, it's probably best to ignore it and just let it do its thing. Let's just go quickly gold, silver. They do copper. We'll do gold, silver, copper. Okay. Leaving aside Friday, nothing has changed in the gold market. Now, granted, if you caught that move on Friday, congratulations, it was a great move. But the reality is nothing has changed from where we were last week. The daily chart still looks the way it looks. It's still in a range. It's a choppy range. It's sloppy. It's not giving you signs where it wants to do. These are customized moving averages. They're not the standard. They're flat, which basically signifies that the market is not doing anything. Market's flat. The market's just not doing anything here. There's really no insights over here. The market that moved more and that looks potentially that this might be going now is probably more silver. Silver had a big move. Obviously, all the metals had a big move. This might be the catalyst that sends silver to 40, being Friday. It could, but the way silver's been trading, it might just be back into the range it falls. There's no real insight here. What you would want to see, commitment to Friday's action. And we'll talk about that on the equity side also. But you don't want to see the market pull back more than 50% of Friday's igniting bar. You don't want to see it. 50% would signify commitment. Okay. So right now, silver's looking good. I would keep that on the radar. And then last but not least, copper. We are going to be having the silver roll soon. So just keep that in mind. Let's go quickly to copper. Copper, also same thing from last week. I know I'm regurgitating a lot of things from last week, but nothing's really changed, which is expected. At least the last 2 weeks of August, it's somewhat expected. There's no real catalyst. We'll discuss more of the Fed on the equity side, but for now, just on the commodity side, nothing's really changed here. Let's just go quickly at grains and then we'll wrap it up. In the grain space, obviously beans are looking really good. They're holding where they need to. There is a potential, I think, that they may get to this 1080. It looks like they may want to get there. They look the best out of everything. We're just going to stick to the high level grains, beans, corn, wheat. We're just going to stay there. We're not going to get more granular. We'll start next week once we start getting after Labor Day. I think for now, everything's a little bit more on the slower side. So it's a little bit You have to be a little bit more picky. One thing with commodities that you have to keep in mind is that commodities in general need someone on the other side for things to, they need a catalyst, they need something. Otherwise, for the most part, commodities in general are very range bound markets. When they go, they just go. But when they're range bound and they're not going anywhere, you really have to pick your spots very carefully, because markets that are range bound, that are slower, are not forgiving. And you want to be in markets, depending on your style, can be forgiving. So just something to just keep in mind. And the last week of August, if you're having a good week or a good summer, I would say ease off the clutch a little bit in the summertime. The last thing you want to do is start hitting markets hard and then with low liquidity and low volume, get into something that could just really hurt you and just ruin your whole entire summer or even ruin your August. It's just not worth it. So it's easy. It's probably better to just, no matter what, slow down, lower your size, just ease off the clutch. Okay. Wheat, obviously, almost like natural gas, the downtrend is intact, but it really, to a large extent, we're really chopping around on this 505 area, which is not doing anything. Again, like that's just really what commodities do. When there's no catalyst, there's no reason for them to move. They just don't. We just look quickly at corn, and now we'll wrap it up. Corn's been interesting. Obviously, it had that move off of WASD. It's bounced, but did have an igniting bar on Thursday. It is holding. Maybe this tries to get back up to 4.25 area. It's very possible. Maybe even 430, or it could get rejected here as well. But if you're looking for a move here, at least on the upside, you really want to see the market not get too low, too much lower than 408. 408, 407. That's about 50% of Thursday's bar. You want to see that commitment. But again, we'll wrap up with this. It's summertime and it's the end of August. So it's basically the end of summer. A lot of people are on vacation. Some people are not on vacation. Volume liquidity really slows down. So you really want to be in the markets that are more in play and are moving around and that are a little bit more forgiving if you make a mistake. Markets that are not forgiving are markets that don't have the volume, don't have the liquidity. And if you make some kind of mistake, you basically toast. So it's better to be more surgical and more careful now. After Labor Day, people come back, things start going. And it's not like magically the Tuesday after Labor Day, all of a sudden markets are ripping all over the place. But just within the couple of days after Labor Day, volume starts to pick up a little bit more like it would normally be. Liquidity is a little bit better. Just things that start to happen. You also start getting, obviously in September, you start getting a little more book squaring because the quarter's coming to a close. Some funds are closing their fiscal year. So there's a lot that goes on in September that could make things a little bit easier. For now, I would say just ease off the clutch a little bit, lower your size, be more surgical, be more selective in what you're trading. If it's not there, it's not there. There's no reason to start pushing, at least not now. Thanks for watching, and I'll see you on the next.